The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's program brought to you by...
So she didn't inherit Grandpa's jawline, but there's no doubt she's family. It's your job to raise her, and it can be tough. Let's make it easier. With technology and automation, you can do more, like produce high-quality bales with way less effort. Built-in sensors can measure bale moisture and size, so you can monitor quality on the go and manage your fleet from your phone. Sit back and enjoy effortless operation. Discover an easier way to work.
Well, as we take a look at the market action from Tuesday, kind of quiet, kind of choppy again, a little bit of green in soybeans, a little bit of red in corn and wheat, kind of a mixed tone in livestock markets, just seemingly waiting for fresh news. Well, what can we do in the meantime as these markets wait for more direction when it comes to our risk management plan and more? Let's talk about all that here today on Market Talk, powered by John Deere Operations Center, which can give you real-time data and insights that will help you run your farm better. Go to Deere.com for more. Jacob Burks with agmarket.net joins us for analysis here today on the show. Jacob, how are you, buddy? Good to talk with you again.
Oh, man, it's always good to talk to you, Jesse, and kind of enjoying this weather. We finally saw summer gave up a little bit this week. We actually got some moisture through here in the southwest part of Wisconsin, so it was a welcome break, I believe, to the farmers out there. The pictures I was getting from the cab of the combine looked a little bit dusty.
Yeah, a little bit dusty. Everyone's been running and gunning really hard, trying to get the crop out of the field here. So we've really ramped things up the last several weeks with all the dry and warm weather we had. But, maybe a couple-day break, not a bad opportunity for folks to sit down, look at their marketing plan, talk budgets, things like that, make calls to folks like yourself as, this grain market in general. I'll just start there, blanket kind of across the whole board. Just seems like we're waiting on fresh news here, Jacob.
It is. I mean, you're not going to get a whole lot of fresh news the way we're used to getting fresh news with the government reports being out. Yesterday I was very surprised, and I guess happily so, that we saw the export inspections come out. I wasn't expecting that. We did verify that the corn market, we're still shipping, large amounts of corn out. The export program in the corn market is great. But the Thursday report that we were expecting to see all along, I think was going to be some big numbers. I was really anticipating that, looking forward to seeing what the USDA does after they added 205 million bushels to the carryout from last year. So many questions on a highly variable yield number from both corn and soybeans, and as we're getting into the heart of the harvest season. So I was really looking forward to this report. We saw the analysts come out. We put our numbers out there. We saw some of these other analysts put their guesses out, and so I think that's the best. That's all we're going to have right now. I mean, but then look at where the USDA has missed those guesses in the last last couple of years of just a lot of variability going into that. Which when you have large numbers, you have large variances, right? And so that's kind of what we're seeing. So I think what we've seen in the marketplace, even though we've seen a government shutdown, today we had the highest opportunity in December corn that we've had in the last couple of weeks. So the market hasn't just given up on that. I think that there's still some opportunities out there as we're fumbling through the last part of harvest that it's still worth having some protection in and some risk management working for you.
Well, let's talk about that a bit more. With a void of information, these markets not moving a whole lot, but they're still moving. The markets are still open. But for a lot of producers, I know you've been having conversations about marketing plans and budgets and more, and looking at just spreads and things like that, and trying to work on some of that risk management, even during a busy harvest season. I mean, what are some of the big things that you are hearing from producers right now? What are some things we should be thinking about in the grain and oilseed trade?
Well, as you said, the rain event got the phones ringing here a little bit as there was a time to take a breath and let's discuss some of the stuff. I think the biggest question you have right now is do you have capacity for it? Do you have room for it? Storage is great if you own the storage. If you have that opportunity to put it in the bin, the spreads are telling you, hey, I'd rather have it later than now. You got basis opportunity. But I haven't found, with the customers that I've dealt with, I haven't found a commercial storage opportunity that really makes me excited. Yet, the storage rates are going to capture all the carry that's out there in the market. And then it's just a hope on basis. And most of your other fees that would go along with it really deter you from doing that. And I think what the producer is telling me and what we've looked at, the biggest advantage that we have right now is, hey, let's get rid of our operating note. Let's take the cash now. We can work on flat market stuff if we get a rally. I tell guys, when you have big capacity years, no matter how you look at this, no matter how the corn finished, I mean, we could have blown it out of the water this year and had a record that might stand for a long time, but we didn't finish the crop well. So no matter if you look at that or not, you're still going to have either a 1 or a 2, right? You're going to have an extremely large production number, the world record production number, because of the amount of acres that we put in. And when you have that type of large crop, it's really hard to keep those carries in the market. What I mean by that is we roll over from 1 month to the next. It's hard to keep that carry. And what we tend to see is the spring kind of drop down. I'm not trying to be a negative Nelly here, but we're still, just because there's carry out there and there's higher prices out there, you need to do something to lock that in. Okay, so if you're putting it in your bin, you need to make sure that we're doing something to capture that carry. If you're putting it in the elevator and you think, hey, I'm just going to rehome with some calls, you can put some calls in place, but make sure you're doing it in a way that you're not cutting into your already mediocre sales too much by spending too much on calls. So just making sure that, without getting specific on exactly strike levels and exact prices and giving you recommendations, I think that it's really worth you getting in and diving into how these tools can help you and can protect you, as opposed to just blindly putting your bushels in storage and just crossing your fingers. Hope's not a marketing plan.
Well, and to that point, hope is not a marketing plan. And I talk about this so much on the show, and I'm sure there's plenty of folks who watch and listen who probably laugh at me a little bit when I talk about the Ronco method, the set it and forget it method, but, and there's plenty of people who do that, and that's their business, their prerogative. But this year, with these margins and everything going on in the ag economy and so much more, I mean, just looking at everything you're doing and having a conversation to discuss the tools that are out there, I think is super important, Jacob.
Well, yeah, Jesse, I mean, me and you discussed earlier, we're going to try to delay this conversation as long as we can so we can be the ones that break the news on what kind of bailout you're going to get, right? And that's today, that's Tuesday's news. When that happens, that's another factor. That's another tool, if you will, when there's a payment coming to the producer. And so how do you go forward that? Does that encourage you to run out and make some sales because now you can add value to your sales with the payout? Or does it make you bulletproof and now I don't need to make a sale? I can pay some of my loan back with this money. How are you going to get that payment has got a whole nother segment in itself. But I would say like knowing these tools and knowing what's out there, there's stuff at the elevator that they can help you out with, right? The elevator is not there to screw you or give you any, to just steal your grain. What they're there to do is they're there to get your grain. They want your grain, because that's how they make money. So I look at that as just know how those tools affect you and how it works. Call the brokerage company, call the brokerage firm and say, hey, how can I duplicate that? Which one's best for me in my operation? How can I go about putting myself where I don't make a sell that is going to hurt me? And what can I do if this market rallies? I mean, is it going to make you sick to your stomach to sell now and not capture a 10, 15, 20 cent rally? Well, put yourself in a position where you can do that.
Let's talk over in that livestock sector, Jacob, and switch gears a bit. Kind of a mixed day in cattle and hog trade on Tuesday. Different principles apply right now, especially in that cattle trade. We've talked about it so much. As you look at things here, as we've gotten into a new month, what stands out to you most in the protein sector right now?
In feeder cattle. I mean, it's again, we look at a $6 higher day yesterday, and it didn't even matter. It didn't even turn anybody's head really. You see the markets open up $3 higher here this morning in the feeder cattle. We go all the way back to unchanged, and then we go $4 higher. So actually I believe we made some new contract highs out in some of the deferred months. It's just an extremely strong market that we really haven't seen cash leading the way. cash has actually kind of gotten quiet. You look at you always kind of venture out to, you got a beginning raw material feeder cattle, and then you got the box beef at the end, and you've kind of kept your eye on what that's done. And the box beef has really came back down. We've seen some pressure on it over the last, 2 weeks, I guess. And then now you started to see a little bit of stability, and here the cattle go again. So it's just been an extremely strong. I think that the one thing you've seen is the fact that this is the beginning of a new quarter. I think Brian Splitt said something earlier today regarding the fact that this is October 7th, and then on July 7th, we saw the same type of action. And so like you're starting to get this money coming into this market, and the cattle market has been one place that the funds and the cash flow hasn't been scared of. You ask yourself every time with how much more they build a record long position in the Commitment of Traders report, which we won't be seeing for a while. They build that position up and expect, okay, how much longer? How much do these guys expect to make out of this? And it's just been very resilient. I think as we've seen this pullback in the market over the last couple of weeks, I think that going into this new quarter, it looks to me like the funds are telling us what they want to do. They still want to stay long cattle.
How about that hog complex? That one's been interesting to watch, and I know you pay attention to what's going on in lean hogs with the charts and more. What are you seeing there as we get into October?
Well, they fired their coach this week.
I didn't mean the Arkansas Razorback hogs. Yes. I meant the lean hog market.
my bad. Yeah, so we should be better. Bobby Petrino is going to lead us back to the promised land here. So anyway, the lean hogs have been. It's something that a very impressive move through the quarter. The end of the quarter. And I think that a little bit of giving up there in the protein. I do think you're starting to see some of the cutout numbers. I mean, that led the way up, right? The cutouts were what was leading the way. And I think going in, to the end of the grilling season, into Labor Day, I think that was kind of what took, the end products led the way on that. Got really choppy, but we're still trading technically, above that. This is the 50-day moving average that's been holding consistently the last 2 weeks. So I can't see the hogs just really folding up and going away. I think the numbers, we won't see numbers. That's the other thing is some of these things could, violently change a month from now. Whenever we open this thing back up and start getting some reports, when we find out and realize that, hey man, that our numbers our pig numbers have been, built back up. But we won't see some of that stuff on a daily basis. That would give us a little bit of heads up of where we're going. I do think that there's some solid support under there technically in the hogs though.
I didn't think about this, but I am wearing a Tennessee shirt today, and Tennessee and Arkansas play this Saturday, and I did not even realize that.
You lie to your friends, I'll lie to mine, but don't lie to each other.
I swear, I pinky promise you, I did not look that up before we had this conversation. Yeah. Oh man, well, hopefully it's a good game.
Yes,
we'll see what happens. So hopefully it's a good game. Jacob, final thoughts, anything you would mention or reiterate to folks when they're taking a look at their marketing strategies here?
Yeah, I think when you look at risk management in general, it tells a lot of different things. We at Ag Market, we've become a little bit more adverse to some of the crop insurance products. We do a lot of LRP with the cattle. The December 1st, you're going to have to be signed up for your PRF. So you guys out there that have hay and got a value of hay and got value of this pasture land, give us a call. We can chat through some of that PRF product. This is a good, solid product for you in risk management. I think if we've learned anything this year on the grain side is, globally and from domestically, we know how to produce crops and we do a pretty good job of it. And I think that the risk is out there when you overproduce, it hurts us in price. And so I do feel like using all these tools and at least knowing what they are and how they help you out is still very, very important for you in your risk management and your marketing plan. That is one thing too to note that the RMA with these insurance companies that are out there, they're still producing LRP quotes every day. That program is still running. So that's part of the government that hasn't shut down. We're still getting feeder cattle reports. So the feeder cattle index is still there. So that part of the government has not shut down. So I would encourage you to take a look at that if that's in your stronghold there.
Well, all of your guys' intel, resources, mobile app, phone numbers, and much more. I know it's all available on the website. That's the easiest place to start, right, Jacob?
Yeah, that's we try to keep it simple. Just in our name, agmarket.net. Look us up. We'd love to chat with you.
Jacob Burks, agmarket.net. Always good to hear from you, sir. Thanks for joining us on the show. Have a great week.
You bet. Thanks for having me, Jesse. Appreciate it.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkag and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.